What's going on, guys? This is Aaron from Departures Capital. We're here with Kyle Floyd, CEO of VOX Royalty. How are you doing today, Kyle?
I'm great, Aaron. How are you doing?
Doing awesome. Excited to have you on. So can you start by telling us a bit about VOX Royalty and what you guys do?
Sure. So VOX Royalty Corp is a company that really distills the value in the commodity sector for our shareholders and investors. And what we focus on is buying third-party royalties. So a third-party royalty is an interest held by someone that doesn't really have a relationship with the mining operation. Interest is typically a top-line revenue percentage in the revenue that's generated from specific mining operations. And so we focus on buying these third-party royalties all around the world held by disparate counterparties, and then aggregating those and bringing in the benefits of these assets for our shareholders in volume and realizing a portfolio effect for our shareholders.
Awesome. So VOX has accomplished a lot since your initial IPO last year. Can you tell us about what you're focused on and the results you have achieved so far when it comes to revenue?
VOX is focused on creating value for our shareholders. And the way in which we do that is we find undervalued royalties to bring into our portfolio. And we have been able to find more royalties over the last 2.5 years than any other royalty company, also at great value. And we do that because we have a very significant technical team. We've purchased and built intellectual property, and we have deal sourcing agents working for our full-time team of 6 around the world that help us find these royalty opportunities over great assets at great valuation for our shareholders.
Wonderful. So, when it comes to your business model, why may investors want to own a streaming royalty company as opposed to like a junior miner or something like that?
That's a very good question, Aaron. Royalty companies have offered better risk-adjusted return for generating commodity exposure, really, than any other format in the markets for a very long time now, about 2 decades. And the reason for that is royalties realize asymmetric risk to return, lower risk and very similar return and upside characteristics that mining companies generate, just albeit at lower risk. And then within a portfolio or a company that has a portfolio of royalties, you get a lot more diversification. So for example, VOX, we went public with 1 production stage asset. We now sit at 5 production stage assets. We could be ending the year, we expect to be at 7, but really as we get into 2022, probably more like 10 production stage assets. That would be more similar to a very large mining company in terms of its diversification of risk across producing assets. Then complementing that is 40 other royalties and streams that are on development stage projects and projects that are coming up the development curve. And so you get tremendous diversification with a lot less risk. And the way a royalty works is you get that top line revenue generated. So for example, using industry terminology, a 1% NSR, which means a net smelter returns royalty, says you get 1% of the top line revenue. Well, we will always get that top line revenue without having to contribute additional capital, and that doesn't get diluted. So when a mining company goes and raises capital, that interest in that share of cash flow goes down. What VOX is able to do is we don't have to contribute any more capital, and we keep that 1% or 2%, whatever the case may be, interest in the revenue generating capability of the mining operation. However, all the material effects of cost on that mining operation are not felt by VOX. So we don't actually operate the mines. Therefore, if costs go up, fuel costs go up, personnel costs go up, those don't get passed on to us, but we get the benefits when they're investing in the growth of their asset free of charge. And so when you look at VOX's portfolio, we have this tremendous, what we call embedded organic growth that's happening at no additional cost to us. And if costs rise from our mining operations, we're not exposed to those either.
Very interesting. So VOX Royalty has exposure to both precious metals along with non-precious metals. Why is this so important?
Well, our belief, and we've really modeled our company off of Franco-Nevada, which is the $30 billion kind of shining star in the industry and has been for the last 20 years. That company has always maintained about those kind of levels of exposure to precious and non-precious. And so when we looked at the business model, we find typically in production precious metal royalties are very competed for, and don't, finding really, really deep value is tough. You can find value, but finding deep value is tough. So where we find really good value are assets a couple years out from production and in other hard rock mining commodities that we're able to find in non-competitive situations, which is what we built our business around. Well, having that 70% interest in precious and 30% interest in other, what it's doing is allowing us to find deals at better value. But what it's also doing, and compounding the positive effects, is if you're spread, you have that diversification across different hard rock commodities. Well, guess what? That's lowering the risk premium because it's better diversification. So Franco has always touted, look, we have a better risk premium because of that diversification. And we're seeing it firsthand in our portfolio. If gold and silver aren't ripping, well, guess what? Iron ore and copper are. And so it's our ability to offer investors the kind of exposure they want, which is general commodity exposure, albeit precious weighted, where if what they believe, what we believe is going to happen is an overall commodity boom, they're not subject to one or two commodities falling out of favor. They're exposed to a basket of really interesting hard rock mining commodities that we expect to go up in value without taking the risk of being focused on, say, just a gold or just a silver or just a copper. We have great exposure, and that lowers the risk premium for our shareholders.
Definitely, yeah, I think that's great. So, what's the one thing you're most excited about for VOX Royalty in the next 6 to 12 months?
The one thing, it's hard to pin down one thing. We have so much growth in all capacities for our shareholders and for our business, both what's in the portfolio now, so what we call just organic growth that's going to be coming to market, but also the acquisitional growth that we're going to be bringing in terms of acquiring new royalties. But I think fundamentally the thing that I'm most excited about for our business and for our shareholders is the growth in revenue that we've realized and that we're expected to continue to realize, which has been exponential. When we went public back in May of last year, we said we would be achieving exponential revenue growth, exponential growth in terms of total royalties acquired into the portfolio, and then development moving up to production. Well, guess what? That's what we've delivered. We're continuing to deliver on that. In the fourth quarter, we did about 160,000 CAD in revenue. We just came out over the last couple of weeks and pre-announced Q1 expected revenues that are approaching $700,000 in revs. That's more than 300% growth quarter over quarter. And quarter 3 to quarter 4 was more than that. So we are on what we believe is a continued trajectory that's going to create a lot of value for our shareholders. And that's probably the most fundamental metric that shareholders can look at in terms of the growth of VOX.
Exciting times. So what are your thoughts on the current commodity cycle and where are we at right now?
It's really interesting, Aaron. VOX was created in 2014. We built this company for what I think is the cycle that we're in and continuing to find ourselves in, which is very, very bullish. We built this company to be an outlet for generalist investors to find better risk-adjusted exposure in the commodity world, and to get that exposure in a way that both one protected and was risk-adjusted, but also presented huge upside. And I think that's what VOX offers, because if you look at just the monetary spending that's gone on with most governments, especially the US, and the printing of dollars and the inflationary pressure that's creating, alongside what is expected to be a stimulus bill, an infrastructure bill that will get passed, that's creating a compounding effect on commodities in a way that I think is going to be more profound than anything we've seen in our lifetime. And VOX, even if that doesn't happen, we've priced our deals based on consensus and declining commodity values. However, and so that return is going to be geared for our investors if we're right. And if this, call it the second super cycle, happens, where you've got the US passing an infrastructure bill, inflationary pressure, and then China also competing for metals, you're in a situation where we might see prices that we never thought possible for commodities. We have not priced our deals that way. But if that happens, we've offered investors, I think, the best risk-adjusted exposure to that event.
Yeah, it's going to be interesting to see how things play out. So finally, what's the best way for investors to find out more information about VOX Royalty?
Yeah, I think the best first port of call is obviously the website. We're on all the likely social channels as well. But if you're really interested, want to find out more information, ir@voxroyalty.com is a great email to get more intelligence on the business. And we can certainly address any specific questions there as well, or also on your platform. So yeah, Aaron, appreciate the opportunity. We're really excited about what's happening within VOX for our shareholders, tremendous growth, and really trading at tremendous value as well as we stand today.
Yes, thank you so much, Kyle. I look forward to covering your story, and best of luck with everything.
Thanks, Aaron. Cheers.
All right, guys, that wraps up the video. Thank you so much for watching. I just wanted to say, if you do support me, the channel, and all these videos, then kindly smash that like button along with hitting the subscribe button and the bell for notifications for future videos. I did also want to say, check the disclaimer down below. This video was sponsored by the company that we are talking about today. So check the disclaimer, full disclosure, and we're out of here. Always remember, guys, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.